Myself, it's King Forker. I'm a licensed appointed insurance agent. I'm working with over 50 different insurance carriers, so I'm an independent broker. That means I have an advantage to compare and save you so much money than if you were going to ask me to write you insurance policy from one single carrier. So I do have the option to look at different carriers and see what they're offering so I can provide that coverage to you and make sure that you're getting the best benefits, of course, at the most affordable rate. Now, what do I want to do here today is simply give you an idea of what you should be looking for if you're actually looking for insurance. And if you're not, or if you do already have insurance, what you can also consider if you do not have these benefits in your policy, you want to consider them so you can take advantage of this and make sure you're always getting the right coverage for you and not paying extra. Because if you took out a policy, say 10 years ago, there are so many other benefits that have come online today that you could take advantage of, unlike when the policy was available to you back then. So I actually am licensed insurance agent. Like I said, I'm originally licensed in the state of Oklahoma, but I write business in all of the states you see here: Florida, Illinois, Maryland, Michigan, New York, Ohio, Tennessee, Texas, South Carolina, Utah, and Virginia. So I will basically want to touch base with anyone who has insurance needs from any of these states. So you can reach out. I'll provide my telephone number at the end of this presentation so you can get coverage for life insurance at a very affordable rate, the best rate there is out there, and at no extra cost to you. If you do go ahead and do business, I might get commissions for you buying insurance. But my services are 100% free to you, so I'm not going to charge you a dime for helping you get that rate. And of course, I only do get compensation if you do go ahead and write up a policy. I do get a commission. Now, what are the five things I was talking about here? Is one of them being that you should, by every chance, try to understand if the policy that you're having right now or you're planning to take, if it includes a living benefit. A living benefit is simply what they call nowadays your benefits in the policy, which will be a death benefit, is now available to you while you're still alive. That means if you get seriously ill, chronically ill, or terminally ill, then you can have access to that money and take care of yourself. And why is that? Because typically, when you get so seriously ill, as we all know in America, it gets really expensive in terms of the medical bills, and most of your medical insurance will not cover as long as you've gotten into that catastrophic phase of your coverage. Now, what happens at that point? That point in time, you're qualified to go into your life insurance and take away some part of that death benefit to take care of that financial need that has arisen because of your critical or chronic illness or terminal illness. Now, some of the insurance underwriters will ask you some specific conditions for that to be available to you. But typically, it will say if you cannot do at least two of your activities of daily living, then it will qualify you to access that amount of your benefits, usually between 1 to 4%. So, say you took out a $500,000 insurance and you having a critical condition like a heart attack or stroke or cancer, say, and that triggers that living benefit rider. Automatically, you would then be having access. If you set for 4%, you'll be having excess of 4% of the 500,000, which is about $20,000 on a monthly basis, dollar for dollar. Look at how much money you can have at your disposal to take care of your financial situation and your medical bills while you are recovering in the hospital or from such a critical medical condition. What is the great thing about that is you still have the balance of that benefit available to your loved ones if you die. Most of this is also paid out tax free, so you're actually not going to pay any dime of taxes on that money if it pays out. So the only thing that you need to be aware of the fact is that the 500,000 will no longer be 500,000 at your death. It will actually be less the amount of money you would have drafted for the living benefits rider, and that will be paid out then to your loved ones at your in the eventual passing. So the other second thing I want to talk about today is, does your policy build a cash value? Now, this is a very important one because a lot of times we just think of insurance and think, oh, I want to get a cheap insurance and I'm done with it. But guess what? There are advantages of having a policy that has a cash value. And the advantages here is that the cash value will be available to you down the line. Because it's basically saying, okay, you pay your premiums and we take part of that premiums and we cover for your, say, your long-term care needs in the future, you have needs for cash, then you can go and borrow against the policy value. So you had a $20,000 policy and it builds cash value over the time lifetime of the policy of another 10,000. You can go borrow against that 10,000 in the policy and you would cash that in and use that for whatever purpose that might be necessary to you to take care of your situation that you needed cash for. So that's what the cash value option in the policy does. Now, this is typically only going to be available with what they call whole life policies. So, if you do have a term life policy, you want to consider taking a whole life policy to be able to build a cash value. Because what that does is it's simply saving a portion of your premiums as a savings account would do and then generate interest on that, and that interest would now make some cash available to you to borrow against in the future. So that's a good thing as well to have. If you do not have that, or if you're planning to take out a policy, please go ahead and take advantage of all those benefits. They're really important. Of course, the number three thing here that I would talk about is about paying off your debt. Now, this is the number one, I think the biggest aspect of life insurance that we normally would not even think about of, but we always look at just dying and getting our families having some money pays out to them. But I would actually say this is probably the most important thing you need to consider before you ever take out life insurance. Why? Because this is gonna be your drawing board. Like that's the breadboard, as they would say it, where you would build all the policy that you finally take out from. That's the basis from which you would take out your insurance coverage. Say, for example, you want to take out life insurance, you need to figure out how much coverage do I need. Now, the typical standard rule of thumb is calculate all your debt, right? How much debt do you have in terms of, like, if you have a mortgage or if you have student loans or you got a car loan or just about any loan or your debt that you might have. Put them all together and then you factor that into a value of an insurance policy and buy insurance against the total of your debt. Now, what is good about that is that if you do pass away, automatically that policy pays out exactly that amount of money that would have covered all the debts. And what's good about it is it doesn't leave your family with any burdens to worry about. Say, for example, you were the breadwinner of the family and you get to pass away unexpectedly, guess what? That mortgage payment still has to be made, right? Who takes care of that? We don't, now the breadwinner gone. So what an insurance policy does for you is it actually provides that cash cushion right there. In the event of your passing, you can go ahead and take advantage of that, and your loved ones will not be worrying about losing their home, or at least they'll have enough time to plan what to do with the property while you're gone. Now, the other thing I want to talk here today is actually the accidental death option in a policy. Now, what is that basically? Now, a lot of people don't seem to get their head around it. Now, what that basically is saying if you do go ahead and you were killed in an accident or you died because of an accidental event, policies will provide coverage for you, extra coverage. So if you had a policy of $500,000 and you took out a $20,000 accidental coverage, the $500,000 will pay out plus the $20,000 of accidental coverage. So you're actually stretching that dollar you put into the policy. So the good thing about it is they are really affordable. So if you do have the option, please don't hesitate to take advantage of it. Accidents do happen, and if you do pass away by an accident, you would have actually doubled your coverage. So that's a great way to also get benefits without having to pay much more than you would. And of course, the final but not the least important thing here is the option for those who really have a hard time trying to figure out or trying to reconcile the fact that they have to put cash against their life. Right? A lot of people have a hard time factoring the two things together or putting that. I mean, it's just understandably so that some people don't want to think about their death, but we'll all die eventually. So you want to maybe be prepared for it rather than having to pass away and not having a plan. Now, if you're one of those people and you're having a hard time coming around the idea of paying money for life insurance and not eventually dying, you would have lost your money. There is what they call a cashback option insurance as well. Now, what that does basically is saying that you get all the money you've paid in as premiums in the event that you do not have to die at the end of the premium term or the policy's term, then you get back all the money you paid in as a premium. Of course, it's a great way to save money over time, right? But the only difference here is you're actually just, betting against the fact that you want to get coverage over a period of time. You make available that cash. And then if you do not die within that period of time, the policy pays out exactly all the money you've paid in the same value that you've put in. So there will be no cash value interest on that as well. So you want to make sure you are aware of what you're actually signing up for. But the good thing here is if you're really not that, sure that you want to spend money on insurance, this is a great option for you because it means that you're actually going to get your money back. So just take enough coverage that you know you'll be getting your money back and you wouldn't have lost anything in the process or in the event that you did not die even after taking out the insurance policy. So that's a great way also of reassuring yourself if you really don't want to put in that that guesswork. You want to put in that guesswork out of the process that you think you might not die even though you'll be paying for insurance. So that's for you guys. Now, if you were going to get started with a policy today, I would encourage you to check out this website, www.lockerquote.com, and we'll be very happy to assist you. We would answer almost all of your questions in there, or at least we will ask all the questions in there that will be important for us to get you a quote. Once you do go ahead and provide that information, we'll let you know what your rates or your quotes look like, and then we can go ahead and take care of your insurance needs. Of course, you have the telephone number as well, 888-569-9229. So 1-888-569-9229. That will be a great number to call, and we'll be very much happy to assist you on standby Mondays through Fridays to Saturdays within business hours. And of course, we work late as well. You can call up till 9 p.m. That's fine. We'll be very glad to assist you. And finally, of course, if you should know by now that our quotes are totally free. So like I said earlier in the call in the discussion, it's totally free for me to provide you a quote. I'm not going to charge you a cent, not a dime, for providing you quotes. That's free of charge to you. No cost to you. As a matter of fact, the telephone number is a toll-free number, so even your call will be free. Call the telephone number, the 569-9999, and the localquote.com website will be the perfect place to start actually, and you'll be all set and ready to go.